Hi, Assalamualaikum. Today my groupmates and I going to present about MFRS 116 and MFRS 140 based on company that we have chose. But first, let me introduce my groupmates. Me myself, Nurul Safia. This is Nur Adriana Balkis. Then this is Nur Darwisha Adriana, and lastly this is Iwan Maisara. First company we have chose is Berjaya Food Berhad. For example, Kenny Rogers Roasted chain of restaurant is being developed and run by Berjaya Food Berhad in Malaysia. On July 26, 2011, Berjaya Food and PT Mitra Samaya Indonesia entered into a joint venture agreement to develop and run the Kenny Rogers Roasted franchise on Java Island and Bali, Indonesia. The remaining 50% of equity interest in Berjaya Starbucks that was not already owned by Berjaya Food was acquired for a total cash consideration of $88 million. This transaction involved 11,500,000 ordinary shares of RM1 a piece, equivalent to about 279.52 million ringgit Malaysia. Second company is Cocoaland Holding Berhad. On 1980, My Food Enterprise Sendirian Berhad, a producer and distributor, was established. The firm initially entered the international market by exporting to the Middle East. It is a prominent producer of sugar, confectionery items in Malaysia, including fruit gummies, sweets, chocolate, wafers, and snacks. Cocoaland Holding Berhad was established on June 6, 2000, and on January 18, 2005, it was listed on the second board of Bursa Malaysia Securities Berhad. On July 18, 2006, it successfully converted to the main board in acknowledgement of the increased need for capital and the growing brand awareness.
I will introduce about MFRS 116 and MFRS 140 through three elements, which are the recognition, measurement, and disclosure. First, I will start for the recognition for MFRS 116. The cost of property, plant, and equipment shall be recognized as an asset if the probable future economic benefit associated with the item will flow to entity and when the cost of item itself can be measured reliably. For additional, the second one, measurement for MFRS 116, states that at its recognition, an item of property, plant, and equipment that qualifies for recognition as an asset shall be measured at its own cost without any markup or include any expenses. For disclosure, the MFRS 116 used the measurement basis used as its method for determining the gross carrying amount. The principle also used depreciation method in it and used useful lives and the depreciation rated for its depreciation, the gross carrying amount and the accumulated depreciation at the beginning and the end of period. Finally, the reconciliation of carrying amount at the beginning and at the end of period. Next, I will introduce MFRS 140 through the same elements. For recognition, the investment property shall be recognized as an asset when it is probable that the future economic benefits that are associated with the investment property will flow to entity and the cost of the investment property can be measured reliably. An entity does not recognize in the carrying amount of an investment property the cost of the day-to-day servicing such property. For the measurement for MFRS 140, the investment property shall be measured initially at its cost at the recognition, and after the recognition happen, an entity shall choose its accounting policy, either the fair value model or using cost model, and shall apply that policy to all investment property that the company have. For disclosure of MFRS 140, this standard requires all entities to determine the fair value of investment property for the purpose of either measurement, which is if the entity uses the fair value model, or disclosure, which is if it uses the cost model. An entity is encouraged but not required to determine the fair value of investment property based on a valuation by an independent valuer who holds a recognized and relevant professional qualification and has recent experience in the location and category of the investment property being valued.
Next, we
move into difference between MFRS 116 and MPERS. For recognition, MFRS 116 applies one recognition principle. The principle or initial recognition by using a components approach to separately account for each significant components of an item of PPE. Consequently, any replacement must be recognized or capitalized as a new component of an item of PPE. For MPERS, its recognition applies to two recognition principles to account for PPE. First is initial recognition and second is subsequent recognition. And mere replacement of component of part of an item of PPE, regardless of the amount, must be expensed to profit or loss. For the measurement for MFRS 116, measurement allows as an accounting policy choice by class of PPE to measure PPE at the revolution model. Meanwhile, for MPERS 2014 only provide for the use of the cost model. Meanwhile, MPERS 2015 had been amended and the subsequent measurement of PPE is the same in all two reporting frameworks. Next, we move into behavioral plans for MFRS 116. Although the scopes of biological assets related to agriculture activities from its scope, entities for MFRS 116 account for behavioral plans in accordance with the standard. Meanwhile, for MPERS, entities using MPERS account for the behavioral plans using Section 34 specialized activities instead of their own standard. Before depreciation of property, plant and equipment for MFRS 116, it is required entities to review the residual value, the useful life, and the depreciation method of an asset at least at each financial year end. MFRS 116 also explicitly states that a depreciation method based on revenue that is generated by an activity that includes the use of an asset is not appropriate. Meanwhile, for MPERS, it is required entities to review them only when there is an indication of significant changes. Section 17 of MPERS do not explicitly prohibit the depreciation method based on revenue that is generated by an activity that includes the use of an asset. Lastly, for disclosure for MFRS 116, there is no exemption in MFRS 116. Meanwhile, MPERS provide for exempt entities to not comply with certain disclosure of the standard. Next, we move into difference between MFRS 140 and MPERS. For first, it is recognition. For recognition for MFRS 140, it is its account policy choice to measure using either cost model or fair value model. Meanwhile, for MPERS, its recognition measure at fair value at each reporting date with changes in fair value recognized in profit or loss. Next, for transfer, MFRS 140 transfer to or from investment property when and only when there is a change in use, evidenced by first is commencement or owner and occupation, second is end of owner occupation, lastly is commencement of an operating lease to another party. For MPERS, it is transfer from investment property to property, plant and equipment if a reliable measure of fair value is no longer available without undue cost of effort or change in circumstance, and to and from investment property only when the property first meets or ceases to meet the definition of investment property. Next is to its disposal. For MFRS 140, disposal and investment property is derecognized and on disposal or when the investment property is permanently withdrawn from use and no future economic benefit or service potential are expected for its disposal. Meanwhile, for MPERS, disposal is not available. And next is for first time adoption. For MFRS 140, a first time adopter might elect to measure the investment property at a fair value when reliable cost information about the asset and liabilities is not available, and use that fair value as the deemed cost if the first time adopter elect to use the cost model. Meanwhile, for MPERS, an entity might elect to measure an investment property at the date of transition of the MFRS at its fair value and use that fair value at its deemed cost at that date. If the first time adopted, elect to use the cost model. Last but not least, for disclosure for MFRS 140 and MPERS. For MFRS 140, disclosure it used MFRS 140 and Section 16 are similar, but MFRS 140 has additional requirement of its disclosure. And meanwhile, for disclosure for MPERS, they use Section 16 of MPERS.
With MFRS 116, for recognition for MFRS 116 is the cost of property, plant and equipment shall be recognized as asset if the probable future economic benefits associated with the item will flow to identity and when the cost of the item itself can be measured reliably. For the additional information, spare parts and servicing equipment equals to equipment recognized in profit and loss as consumed, but it could be identified as property, plant and equipment if it used by entity more than one period, or if the spare part of servicing equipment can be used in only one condition of property, plant and equipment. For the measurement, in measurement we'll be discussing about three parts, which is at recognition, on cost and after recognition. So, measurement at the recognition, an item of PPE that qualifies for recognition as an asset shall be measured at its own cost without any markup or include any expenses. For the cost, it means that the cost of the item of PPE is the cash equivalent at the recognition date. And for the after recognition process, the entity for this case of this company shall choose either cost model in paragraph 30 or revaluation model in paragraph 31 as its accounting policies, and shall apply the policy to an entire cost of property, plant and equipment. And lastly, for the disclosure, MFRS 116 use the measurement basis used as its method for determining the gross carrying amount. The principal also used depreciation method in it and useful life and the depreciation rate on its depreciation, the gross carrying amount and the accumulated depreciation at the beginning and the end of the period. And finally, the reconciliation of carrying amount at the beginning and at the end of period. So let's continue to the MFRS 140. For the recognition, the investment property shall be recognized as an asset when it is probable that the future economic benefits that are associated with the investment property will flow to the entity, and the cost of investment property can be measured reliably. An entity will thus not recognize in the carrying amount of an investment property the cost of the day-to-day servicing such property. For the measurement of 140, I only found one, which is the investment property shall be measured initially at its cost and the recognition, and after the recognition happen, an entity shall choose its accounting policy, either the fair value model or using cost model, and shall apply the policy to all investment property that the company have. Lastly, the disclosure. For MFRS 140, it requires all entities to determine the fair value of investment property for the purposes of either measurement, like if the entity used the fair value model, or disclosure if it used the cost model. An entity is encouraged but not required to determine the fair value of investment property based on the valuation by an independent valuer who holds the recognized and relevant professional qualification and has recent experience in the location and category of the investment property that is being valued. So, from the MFRS 116 and 140, we will now continue to the difference between MFRS 116 and 140 between the two company, which is Berjaya company and Cocoaland company. So, firstly, the reconnection for the Berjaya company, MFRS 116, which is PPE, their PPE is recognized on cost. However, if there are any construction related to the property, plant and equipment, it will not be depreciated because it is not ready to use. It will be recognized when disposal or when no future economic item of the PPE. For the MFRS 140, the recognition for Berjaya company, if there any written investment, it is recognized at the fair value. For the Cocoaland, recognition of MFRS 116 is the PPE is recognized on cost, and MFRS 140 the recognition is measured initially at cost. It will recognize when disposal or permanently withdrawn when no academic benefits from the disposal. We continue to the measurement. For the Berjaya company, MFRS 116 is the measurement of PPE listed in Berjaya is building, office equipment, smallware, motor vehicle, computers, plant and machinery, kitchen equipment, furniture and fittings, renovation and restoration. After the recognition of those items, the PPE is de-recognized upon disposal or when no future economic benefits are expected from its use or disposal. So, any gain or losses on the recognition of the assets are included in the profit or loss in a year of the asset is de-recognized. Meanwhile, for the MFRS 140, the list is using straight line basis method, which is after recognition, any investment retained is recognized at the fair value. For the measurement of Cocoaland for MFRS 116 and 140, for MFRS 116, the list of PPE in Cocoaland is freehold building, motor vehicle, plant and machinery, office equipment, furniture and fitting, warehouse equipment, electrical fittings, renovation, science lab equipment, factory equipment and computer software. All of these items, after the recognition, a financial asset or part of it is de-recognized only when the contractual rights to receive cash flow from the financial asset expire or transferred, or control of the asset is not retained, or substantially all the risks and rewards of ownership of the financial asset are transferred to another party. On the recognition of the financial asset, the difference between the carrying amount of the financial asset and the sum of consideration received, which is including the new asset obtained less any new liability assumed, is recognized in profit or loss. Meanwhile, for the measurement for MFRS 140 for the Cocoaland, the list is using the straight basis method. And lastly, the presentation and disclosure for both company. For Berjaya company, it is initially recorded at cost. Depreciation, property, plant and equipment are using straight line basis. Rates for depreciation is building 2%, office equipment, smallware and motor vehicle is between 20% to 33%, computers is between 20 to 40%, plant and machinery, kitchen equipment, furniture and fittings is between 10 to 33%, and lastly, renovation and restoration is based on list term. For disclosure for Berjaya, Berjaya determined to use measurement for the fair value entity for the investment property. We continue to the presentation and disclosure for Cocoaland. Depreciation of property, plant and equipment using straight line basis. Meanwhile, the freehold land is not depreciated. Useful life of the asset and depreciation method. Freehold building is over the remaining useful life between the 22 to 41 years. Motor vehicle is 20% of depreciation. Plant and machinery, office equipment, furniture and fittings, warehouse equipment, electrical fittings, renovation, science lab equipment, factory equipment and computer software, all of it is 10% of depreciation. For the Cocoaland disclosure of MFRS 140, the depreciation is on straight line basis method. If impairment exists, carrying amount of the asset will be assessed and the recoverable amount is immediately written down.
So the conclusion, we can learn a lot about the MFRS 116, MFRS 140 and about MPERS while working on this assignment, which indicates that the difference happened between four of it, since for MPERS they use different section in it when they touch about plant, property and equipment and investment property. We also learn how to read the annual reports for both companies, which are Berjaya Food Berhad and Cocoaland Holding Berhad, and pick useful information that can be used for our assignment this time. In this assignment too, all our group members work together quite well. We were able to perform this task in a peaceful manner. We may state that by completing this assignment, we will be able to make more decisions, since we will be able to understand and build the blog using introductory, easy and applications. The recognition, measurement, also the disclosure will all be discussed. It was enjoyable to learn because we can utilize it in our future, maybe employment days. For instance, as an auditor, to know whether the standard used in the company is complies with the MFRS or MPERS.